Hello, Keith here for Am I Rich? And today is a recap of the week. Just a reminder, last week I think it was Groundhog Day. I put a video out kind of saying the holds and the buys of stocks that I was thinking about and posted how well they did. Now, back then the polar vortex was coming and it's here, and man, where I live, it's really cold this last week. Not a fan. So let's get right into it. So February stocks so far that I have been looking at that I think maybe are a buy have been Google and Fiat Chrysler. These stocks were fairly interesting to me. There is a bit of a caveat on the Fiat Chrysler one. The earnings came out this week and I posted a video just before earnings and I said I really wanted to see the earnings. So it is kind of something I think is a buy for myself, but I kind of put both prices, the price that before their earnings, what it was in case I would have bought it then, and then just after the earnings. So just so people I don't want to pretend I'm just giving a lowball number just to make my picks sound better. But anyways, these are just things I was thinking about, and if anybody has any comments about these stocks, I'd love to hear. So Google, the price was at $11.44 when I had mentioned that I thought it was a good buy. They kind of had these slow revenue growth or some ambiguous discussion about how they're going to keep their revenue strong from online advertising. And that kind of sent the stock down a bit. So I thought it was an interesting buy. It's down even further to $1,095 at the end of this week. And it's my 4.2% down from then since I talked about it. And for me, this is, although it doesn't have a dividend, so that's the biggest downside, I see this as really like the same thing as Microsoft. A very safe long-term buy, kind of a blue chip company for me. And that's my hypothesis, and it has a lot of potential growth vectors. So if they hit on a couple different things like autonomous driving or SpaceX, I like that stock. So that's one reason I still think it's a good potential buy. Fiat Chrysler. So that was the other one I mentioned. I wanted to look at the earnings. At the time it was $17.44. At the end of the week it's $14.90, so it went down 14.6%. And really I think that the price, even like a low estimate, I don't see why this stock shouldn't eventually hit $17 for the kind of economics they have and the kind of outlook they have. I suppose another bear thesis is maybe things in Europe get slower, and so then this could have a little bit more headwinds to it, but I still see them as doing fairly well. And if it kicks in a dividend, I think the upside is strong enough to negate some of the potential downsides. But that's my opinion. This is just what I'm thinking about this stock. And disclosure, I did buy it, originally at like $11, so had some kind of safety there already. Now, the price after the earnings came out, which is what I was kind of waiting for, it dropped down to $15.30. So that change is actually it's down about 2.6%. So not as drastic, but we'll have to see. Maybe that'll continue, maybe it won't. But I kind of see this stock as, in the long run, going up, into the 20s, which is a pretty good gain from 15. So you're looking at still, 30% potential gain in my mind, unless I'm missing something about the argument. Now, the big problem with this, and the big reason stocks in general went down this week, was the worries about Chinese tariffs and how that's going to play out. So people are worried about that. The stock market's kind of down. And some people are worried about, are we going back into a big dip like December? I suppose everything's possible, but My view on the big dip in December is stocks were kind of overvalued slightly before, like in October or September of 2018, and then they dropped into November, probably because of the excuse is, tariffs and economic slowdown. So stocks were dropping, and I think probably some big hedge funds thought maybe just like clear the boards in December and then restart over in January and see if they can get some cheap deals. So I think there was just some like end of the year kind of sell to kind of make their numbers, reset their numbers and make January look better. So that's my, theory. It could be totally wrong. So now we're back up a little bit above the levels before they dropped in December. So the stock market is kind of back into potentially this volatile area where it's going to go up and down for a while. That's my theory, but we'll see how it works out. Now, just the other stocks. I also talked about Kroger and Sherritt. Kroger's a grocery store. Sherritt is a nickel and cobalt mining company as well. They have some oil and gas stuff and electrical generation stuff in Cuba. But they're a Canadian mining company with some holdings in a mine in Madagascar. So Kroger was 28.07 and it went to 27.80, again down about 1%. Sherritt, I think it was at 0.44, so like 44 cents. When I look back, it said it's 43 cents. It's currently sitting at 44 cents. So even though that's a gain of 2.3%, it might be a gain of 0 from when I posted the video. So kind of nothing happening in those stocks, and I do think they're interesting at the prices that they're at, but I kind of want to wait and see how things turn out. Especially Kroger, I want to see like how just I don't know if the prices, it went up a little bit recently. I'm not sure if the price is going to jump up again, so I kind of want to get in a period where it's more likely that the stock would go up faster. So and Sherritt, it's again kind of waiting to see, are nickel prices really going to start to pick up, and are any other kind of unknowns going to appear. But otherwise, I think it's probably it is an interesting price, so that's why I kind of brought it up to kind of share with you and see if you have any opinion on that. And for anybody else who was watching at the beginning, the 3 original buys I had for January were CIBC Bank in Canada, Keyera, which is like a midstream gas fractionation company in Canada as well, and then Facebook. So those stocks, so far to date, since I talked about them, CIBC is up 1.1%. Again, it has, at that point, it's like a 5% dividend just about. So fairly safe bet. It was a very low price, like the bank is as low as it has been in 20 years for its kind of intrinsic value, the way I see it. And Keyera is 2.1% up. It also has a really good dividend. And Facebook, it jumped up extremely well after its earnings. So it's it was up, I think, 17% at the time, but now it's like 16.3, which not surprising. I mean, people who made 17% overnight, they probably thought, well, maybe this is growing faster than I expected. Maybe I'll just cash out, get some earnings or some profit from it, and then see where it goes after that. So yeah, these are my picks. I thought, like, I still think they're pretty good overall picks for my mindset. If I hear anything different, that would be great. Feel free to leave comments in the below, and yeah, we'll see you next time.